Welcome back to the Stock Commandments channel. Today, we're breaking down how trade tariffs mess with the stock market. Think of tariffs like a Game 7 full-court press or a surprise diss track that shakes the whole industry. Let's get into it. Tariffs are like dropping a heavy diss track, shots fired at another country's economy. The US drops tariffs on China? Boom. That's like Drake's back-to-back at Meat Mill. But guess what? China fires back. Just like Pusha T's The Story of Adidon, now it's an all-out war. And just like a rap beef, the stock market reacts immediately. Investors panic, stocks dip, and volatility spikes. Tariffs don't hit every team the same. Think of it like a full-court press defense. It forces turnovers for some teams but opens fast break opportunities for others. If the US slaps tariffs on imported steel, guess who wins? Domestic steel companies. Like a power forward feasting in the paint. But if you're an automaker relying on imported parts, that's like getting double teamed. You're struggling to make a move. Winners: US steel and aluminum, local manufacturers. Losers: tech companies, car makers, and anyone importing raw materials. When tariffs go up, prices follow. It's like losing your star player to injury. Other players gotta step up, but it won't be the same. Businesses either eat the cost, taking the L on profits, or pass it to consumers, making everything more expensive. Either way, it's bad news for the economy. Just like in the NBA or NFL, the Federal Reserve is the ref. If tariffs cause inflation, they step in and raise interest rates to slow things down. Higher interest rates make it harder for businesses to borrow money, slowing down growth like a defensive lockdown in the fourth quarter. Stocks don't like this. When the Fed gets involved, the market gets nervous. Now, here's where things get wild. If one country slaps tariffs, the other doesn't just sit there, they fire back. That's like Draymond Green getting ejected and taking the whole team down with him. The 2018 US-China trade war was the stock market's version of a heavyweight fight: big swings, panic selling, and stocks crashing like a badly missed dunk. Sometimes, when tariffs go up, currencies start moving like a blockbuster trade deadline move. If the US throws tariffs on China, China can devalue its currency, making its exports cheaper, like a team trading draft picks to rebuild. A stronger US dollar is bad for American exports, like trying to shoot threes with a double team on you. So, what's the game plan? If tariffs start heating up, expect the stock market to get shaky, volatility, price swings, and some sectors taking L's while others go on a winning streak. Like a championship team adjusting their strategy, investors gotta be ready for the playbook to change. So next time you hear tariffs in the news, just remember, it's a high-stakes rap battle, a Game 7 showdown, and a market roller coaster all in one. If you liked this breakdown, hit that like button, subscribe, and drop a comment. Who do you think wins in a trade war? I'll see y'all in the next one.